Welcome grade 11s. We're here doing your show finally at the end of a very long Wednesday, but you know, we are here. Mahesh and I are here and we're here for you, I promise. So you're here with us and we're going to be doing some accounting. Yeah, how's that been going?
I like the way you say it. We're going to be doing some accounting.
Very in-depth thought about that.
Yeah.
I personally didn't take accounting, but that doesn't mean that it's not important, right? Exactly. But this show is proudly sponsored by the MTN SA Foundation and endorsed by the Department of Basic Education. So before we get started, and before Mahesh takes over, I'm just going to tell you where to find me. It's facebook.com/learnextra with an X, Twitter @learnextra. We've posted everything you need to know on the page. Just go have a look. If you have questions for me, post them and I promise we'll have a look. But Mahesh is going to take over. Go for it.
Okay. Right. Hi, guys. As Megan already mentioned, it's time for accounting. So I hope you've got your calculators, pen, paper in front of you, and I expect you guys to work with me. Now, in today's lesson, grade 11s, we're going to focus on tangible assets, which will include asset disposal. Let's just put that up for you guys. Okay, so it's going to include some asset disposal. Then we're also going to look at some depreciation calculations as well as your tangible asset note, which appears in the balance sheet. Right, let's get straight into it. Our very first question, guys, we're going to be looking at or focusing on the following. So we're going to complete the following ledger accounts properly balanced or closed off on the 30th of June 2014, which obviously is the end of the financial year. And the accounts that we're going to be looking at will be asset disposal, depreciation. I've changed the question slightly, so instead of looking at the T account, I'm going to focus more on the actual calculations. Right, the next part to the question, we're also going to be completing the tangible asset note for the year ended 30th of June 2014, and you're going to find, guys, that this particular part of the question normally carries a lot of marks. Okay, then question 3, disclose the tangible asset amount that will be shown in the balance sheet on the 30th of June 2014, and the question wants you to show a calculation. And the very last question is a bit of internal controls. Remember, guys, internal controls appears in almost every section of accounting, so make sure you know your internal controls to safeguard or protect your fixed assets, which is obviously your tangible assets. Right, our information that we have. Okay, so let's just move on to the information. So there's my information. The information below was extracted from the financial records of BMW Traders. The business's financial year ends on the 30th of June 2014. We are given our balances as at 30th of June 2014 for our tangible assets. So we've got land and buildings, we've got equipment, we've got vehicles, and as expected, we've got also our accumulated depreciation on vehicles, accumulated depreciation also on equipment, and then with our normal accounting question, there's always some additional adjustments and information. Okay, Megan, we're ready to get started with the actual question.
Cool.
And I hope you're going to pay attention because...
She's going to ask me. I can just see this happening.
I love that look on your face.
Okay, let's go. I'll try my best.
I'm going to try not to. Okay, cool. Right, guys, let's get started. Okay, now remember, as accounting students, especially in grade 11, we do not have to start with question number 1. Okay, Megan? Accountants are very logical, but we don't start with question number 1.
That's very strange.
Okay, so I'm going to start off with land and buildings. Now remember, tangible assets, you've got land and buildings, you've got equipment, and you've got vehicles. So my logical approach will be start off with land and buildings. So that's going to be my starting point. So in this particular question, I've decided that I'm going to start with my tangible asset note, and I'm going to focus on land and buildings. Now remember, guys, in this note, what do we disclose? We look at what happens at the beginning of the year, We then focus on movements. Movement simply means what happened during the year. And then finally, the last part of this note focuses on what has happened to your tangible assets at the end of the year. Okay, so remember, we're starting off with land and buildings. Let's go back to our information. And from our info, we've picked up the following in terms of land and buildings. So balance as at 30th of June 2014, land and buildings has a balance of 500,000. And the additional information in terms of land and buildings, let's get to that. Okay, there we go. Due to the recent expansion of the business operations, BMW Traders constructed an additional storeroom. All renovations were completed on the 1st of Feb 2014, and a check was issued to Build It renovators for 120,000. And then, very, very important, grade 11s, this was correctly recorded. In other words, this additional storeroom, which costed the business 120,000 Rand, was recorded in your accounting books. Now, how are we going to disclose this information? Let's go back to our information given to us at the beginning of the question. So, land and buildings. I'm given my land and buildings an amount of 500,000 on the 30th of June 2014. So immediately, because that additional storeroom, the construction was recorded, this balance represents my balance at the end of the financial year. So if we go back to our answer sheet, let's do that. Land and buildings, beginning of the year, I have no idea what the value of my land and buildings were, but my cost at the end of the year is an amount of 500,000. Right, what happened during the year? So on the 1st of Feb, we obviously constructed an additional storeroom. So under movements, which refers to what happened during the year, there was an addition. And remember, addition is always recorded at cost. So let's go back to the information and let's see what the cost of construction was. I think it was 120,000. Yes, it was. So 120,000. Let's take that information through. So addition at cost 120,000. Right, grade 11s, very, very important. We are given our value or our cost at the end of the year. We also given what happened during the year. We constructed an additional storeroom for 120,000. So before that additional construction, the question now is asking you, what was our cost at the beginning of the year before we constructed the storeroom? Okay, Megan, can I come to you?
Yeah, try.
Are you sure?
Try
Okay,
me.
right. So if that's my value at the end of the year, 500,000. During the year, I constructed a storeroom for 120,000. Before I constructed the storeroom, if I had to ask you what then was my value at the beginning of the year, don't give me the amount, but how will I work out the value at the beginning?
You just minus it.
Good, I'm just going to subtract.
Yeah.
So in other words, I'm obviously working backwards. I'm subtracting 500,000 minus 120,000. Okay, so 500,000 minus my 120,000. So at the beginning of the year, guys, my value of land and buildings was an amount of 380,000. So let's add that on, 380,000. Always, always grade 11s double check. So at the beginning of the year, your cost, 380,000. You then constructed that additional storeroom for 120,000. End of the year, your cost of land and buildings now increases to 500,000. Okay, you guys got that. Not difficult, but remember, requires you to read a bit. Right, if we had to complete the rest in terms of land and buildings, carrying value at the beginning of the year will be the same, so 380,000. Okay, under movements, there was just an addition. Carrying value at the end of the year, 380,000 plus the 120,000 to give me 500,000. Okay, land and buildings, guys, completed. Let's now move on to our next tangible asset, which will be vehicles. All right, I'm just going to use a different color. So vehicles, let's do vehicles in green. Okay, let's go to our information in terms of vehicles. Okay, so we're given vehicles has a cost of 300,000. Accumulated depreciation on vehicles on the 1st of July 2013, an amount of 80,000. And then my additional information, let's go through that as well. The business purchased an additional vehicle from Toyota Motors on the 1st of December 2013. The business paid a deposit of 50,000 and 6 monthly installments of 10,000. The above entry has been recorded. So again, guys, very, very similar to land and buildings. Let's firstly work out what was the cost of this additional vehicle that we purchased. So we paid a deposit of 50,000, and thereafter for 6 months we paid a monthly installment of 10,000. So we obviously paid a further 10 times 6, which will give me 60,000. So the total cost price of this new vehicle is an amount of 110,000. Right, we're going to record this information now in our tangible asset note, very similar to land and buildings, guys. So let's get started with the information. Okay, there we go. So we've got vehicles, 300,000, but again, remember, the purchase of the new vehicle was already recorded. So this 300,000 represents my balance at the end of the financial year. So let's put that through in our answer sheet. There we go. So my cost at the end of the financial year, an amount of 300,000. Right, what happened during the financial year? We had an addition at cost, and we worked out that addition, an amount of 110,000. And again, guys, remember, we're still working backwards like we did for land and buildings. So if I had to ask you, what was my cost of vehicles before I purchased this additional vehicle or this new vehicle, I'm going to take my 300,000 minus 110,000. So let's do that. Okay, so 300,000 less the new vehicle of 110,000. And at the beginning of the year, my vehicle had a cost price of 190,000. So let's fill that in. At the beginning of the year, 190,000. Right, the additional vehicle included. Now let's focus on depreciation. Now we know vehicles and equipment depreciates, loses value over a period of time. So we're going to start off first with our accumulated depreciation that was written off at the beginning of the financial year. So again, back to our information. At the beginning of the year, which is the 1st of July 2013, accumulated depreciation on vehicle, in other words, depreciation written off thus far, an amount of 80,000. So let's take that through. Okay, in brackets, an amount of 80,000. Right? My cost less my accumulated depreciation, guys, will give me my carrying value at the beginning of the year. So let's get our calculators out. So my cost, 190,000 minus the 80,000. So at the beginning of the year, the vehicles are worth 110,000. So let's fill that in, 110,000. Right, we've recorded our addition, but we know with vehicles, it's going to obviously depreciate further. So under movements, I also need to write off depreciation. Okay, Megan, this calculation is a bit long, so I don't know whether we should take a break, our first break, or should
if
I?
you're willing to, yeah.
yeah, I
No
think let's
problem.
take a break and then we'll focus on the depreciation of vehicles.
Okay, fantastic. Okay, guys, well, like Mahesh said, we're just going to take a little bit of a break. So put those pens down, those calculators just to the side, and we'll be back straight after the break. Welcome back, grade 11. So I'm here to tell you about this really amazing competition we have here at Mindset. So what it involves is Safeway K53. All you have to do is go and buy this lovely book like this on Facebook, which is Safeway K53. Or you could even, if you don't want to buy the book, but I really think the book's awesome because it's got practice tests and some emoji con things and how it looks on the inside of a car. So I would really do it. And I went to buy this book, so I'm just saying. And you can also download it at the Google Play or at Samsung App Store. So it's quick and easy. And you know what the best part is? You get to win yourself a Chevy Spark L. And you only have 3 days to do this because the competition is going to be closing. So get your entries in, get voting because you could win a really, really awesome prize. And it's Be a Bright Spark competition. Really awesome, don't you think, Mahesh?
I think, yeah.
Did you ever use a K53?
I did a very long
Very
time
long ago, but it's
Yeah,
really
but let's
helpful.
not talk about how long ago.
Okay, we won't.
Okay.
get into it. We'll talk about accounting.
Yeah,
How about that?
yeah, let's stick with
Go
accounting.
for it.
Let's stick
Oh,
with
yeah.
depreciation. Right, guys, that's where we stopped before we took our first break. So we were busy looking at vehicles, and we're now going to calculate the depreciation for this current year. Okay, so if we go to the table that I've set up, remember, guys, I'm not doing the ledger account because I know you guys know how to do the ledger account already. We're going to focus on the calculation of depreciation. Now, what you would have already noticed, sorry, Megan, I think it's the cold. It's
It's
going
like-
up my nose.
Like sniffy and freezing in
Yeah.
here.
It is.
Crazy.
Okay, guys, in terms of vehicles, what I've already done is I've got old and new. Why old and new? Because we obviously had our old vehicle at the beginning of the year, and during the year we decided it's now time to buy a new vehicle. So the depreciation calculation is going to be different for the old vehicle as well as the new. Right, we're going to focus first on the cost price. So let's start with old. Okay, so if we go to, we've already worked that out. Our old vehicle would refer to the cost at the beginning of the year. I'm talking about this amount here, the 190,000. Our new vehicle would be that additional vehicle purchased, 110,000. So let's fill that in. Okay, so my old vehicle, an amount of 190,000. And then I've got my new vehicle, my cost price being 110,000. Now remember, guys, whenever we calculate depreciation, we obviously need the amount, we need our rate, as well as time. Amount depends on the type of depreciation to be written off. So if we go back to our information, okay, so further down, there we go. Depreciation is provided for as follows: vehicles at 10% per annum on the diminishing balance method. In other words, we have to take our cost minus accumulated depreciation. So let's do that. So let's go back to our answer sheet. There we go. So we're going to start off with with old first. Our cost is 190,000. We're first going to subtract our accumulated depreciation that we've written off thus far. And I think it was an amount of, let's just go back there. It was that amount of 80,000. So let's fill that in. Okay, so minus 80,000. And that gives us our carrying value, which is 110,000. We're going to multiply this by our rate of depreciation, which was 10%. I'm just going to quickly double check that. I'm sure it was 10%. Just check that. Yeah, there we go. It was 10%. Okay, so that's fine. And then remember, the old vehicle would have been used for the entire financial year. So I've used it for the entire year, which obviously that cancels out. So the amount of depreciation I need to write off on my old vehicle would be an amount of 11,000. Okay. Got it, guys? Easy, not difficult. Now let's look at the new vehicle. The new vehicle, remember, guys, there's no accumulated depreciation to actually subtract from the cost. So I'm going to stick with the amount of 110,000. I'm going to also multiply this by the rate, which is 10%. However, the time will be slightly different from the old. So let's go back to the actual transaction. Okay, so this new vehicle was purchased on, there we go, it was purchased from Toyota Motors on the 1st of December 2013. So if I had to put this information on my timeline, okay, remember my financial year starts on the 1st of July and ends on the 30th of June, okay, 2014. And if we look at December, December is obviously 1st of December, so somewhere here. Right, so I purchased the vehicle on the 1st of December, which means the business used the vehicle or owned the vehicle for this time only. So if we look at December until the end of June, Megan, you want to help me there? It should be 7 months, isn't it?
Yeah.
So December until the end of June, we're going to depreciate this vehicle for 7 months only, not for an entire year. So let's go back to our calculation. Right, so times that by, going to do it at the bottom here, times it by 7/12. Okay, guys. Right, let's get the calculator out. So we're taking 110,000, which is our cost price. Okay, times that by the rate, which is 10%, times 7 divided by 12, and that should give us an amount of, okay, 6,416. I'm going to round up to the nearest rand, so that should be 6,417. Okay, right, so I've done my calculation. So I've got my old depreciation to write off. I've got my new depreciation to write off. The last part of this particular calculation is what then is my total depreciation. Okay, let's just bring this down a bit. So my total depreciation will simply be old plus new. So the 11,000 plus 6,417, and that's going to give me, let's again get the calculator out, so plus 11,000, and I'm still rounding up to the nearest rand, so that's giving me 17,417. Okay, just check that again. Yeah, there we go. Right, guys, so depreciation calculated on vehicles. Let's take this amount through to our asset disposal note. Okay, so my total depreciation that I've written off, an amount of 17,417. And remember, guys, depreciation decreases the value of your asset, so that must be in brackets. Right, carrying value at the end of the year, still with vehicles. So again, this part is not difficult. This part is easy because I've got all the amounts filled in already. So I'm going to start with my carrying value at the beginning of the year, which is 110,000. I then am going to add my additional vehicle that I purchased, so plus 110,000, which is just a coincidence, guys, that the amounts are the same. I'm going to subtract the additional depreciation that we've just calculated, 17,417, and at the end of the year, my vehicles are worth 202. Okay, let's just get that out again. 202,583. Okay, right, and the final bit to your vehicle, I've got the cost filled in already. Accumulated depreciation Obviously, they're talking about the end of the financial year. This calculation, guys, very important. We often find students make a mistake with this calculation. So I want you guys to pay attention to how I'm going to calculate this amount. Right, I'm going to do the calculation at the bottom so that it's clear for you guys. Going to start off with accumulated depreciation at the beginning of the year. So at the beginning of the year, we've written off 80,000. Okay, so this is obviously beginning of the year. During the year, we wrote off an additional 17,417. So 17,417. So at the end of the year, my total accumulated depreciation will simply be the sum of the two. So let's get the calculator out again. Okay, so 80,000 being my opening balance plus the additional depreciation, 17,417. So at the end of the year, in total, we've written off 97,417. So 97,417. And this figure obviously must be in brackets, guys. 97,417. Right, remember, the last two lines of this note is what we normally refer to as a recon because it helps us to check our figure above. So let's do that quickly. Okay, so at the end of the financial year, my cost is 300,000. So 300,000 minus 97,417 to give me 202,583, which is my carrying value. Carrying value, guys, simply means what are your vehicles worth? We know what the cost is. We know what the accumulated depreciation is. Now tell us what your vehicles are worth. Okay, Megan, how are we doing there? We're done with vehicles. Do we have any questions?
No questions.
No questions at all. Okay, right, mindsetters, I'm sure you're waiting now for asset disposal, which we're now getting to, because we're now going to look at equipment. Okay, so let's go to our information once more, and let's look at our final tangible asset that we haven't dealt with yet. So my information as far as equipment is concerned, okay, there we go. Equipment. So my cost is given to me at 120,000. Then I've got my accumulated depreciation on equipment thus far, an amount of 45,000. And then some additional information. There we go. On the 1st of January 2014, equipment costing 20,000 Rand was sold on credit to T. Murray for 12,000. The accumulated depreciation on the 1st of July 2013 was 10,000. On the same day, the business purchased new equipment for 8,000, and very, very important, no entries have been made for the above transaction. Okay, right, now a lot happening in this one additional information, guys. We've got a disposal, okay, where we've obviously sold equipment, and we've also got a purchase where we decided time to buy new equipment. Right, now remember, guys, always try to deal with either the disposal first or the new purchase, but not both at the same time. Okay, I'm sure you guys know what I'm talking about. Right, so I'm going to deal with the disposal first. But before we actually look at the disposal, no entries have been made for the above transaction. So if I go to my information that is given to me at the top, this information then represents beginning of the year because no entries have been made for the transactions. So let's start off our note by entering this information. So back to, there we go. So equipment at the beginning of the year. Okay, I need to go back to that amount, 120,000. So let's fill that in. So my cost at the beginning of the year is 120,000. Accumulated depreciation that I've written off thus far. So on equipment, 1st of July, which is obviously still the beginning of the year, we've written off 45,000. So let's fill that in. Remember, do not forget the brackets, guys. 45,000. Right, my cost 120,000 minus my accumulated depreciation is going to give me my carrying value. Okay, so minus the 45. And at the beginning of the year, our equipment is worth 75,000. Right, we're now looking at our movements, and I have chosen to start with disposals. So let's now look at what happened during the year in terms of our asset disposal. Right, whenever we're working with a disposal, guys, remember, we need the cost price of the asset that was sold. So let's go to our information and let's pick that up. The cost price of this equipment that we sold, there we go. On the 1st of January, equipment costing 20,000 Rand was sold. So that's my cost price. So let's take that through. Okay, so my cost price is an amount of 20,000. Okay, then I also need my selling price. How much should I sell the asset for? So again, back to our information. It was sold on credit for an amount of 12,000. Okay, so far we have the selling price as well, an amount of 12,000. What else do we need for asset disposal? We need our accumulated depreciation. Okay, so if we go to our information again, the accumulated depreciation on the 1st of July 2013 was 10,000. Okay, so let's put that through. Accumulated depreciation, an amount of 10,000. But bearing in mind, this 10,000 was at the beginning of the year. So in other words, on the 1st of July, the accumulated depreciation was 10,000. When did we sell this asset? Again, let's go back to our information. The asset was sold on the 1st of January 2014. Okay, so the asset was sold somewhere here, 1st of Jan 2014, which means we obviously used the asset before we decided to sell the asset. Right, I've got my information listed for me already, which means I'm ready now to look at my asset disposal because I've got my cost price, I've got my selling price, and I've got my accumulated depreciation. But I know exactly what you grade 11s are thinking. Hang on, we can't really use accumulated depreciation yet because we first need to update our accumulated depreciation. How do we update accumulated depreciation? And I hope Megan was doing accounting so that she could have answered this question. Okay, there's that look again. We update by providing additional depreciation. So that's exactly what I'm going to do, guys. I need to provide additional depreciation. So let's go to that table again. Okay. Okay. Right, so under disposal, guys, not going to take us very long. Let's look at our additional depreciation. So we're going to start off with, again, amount, rate, and time. Okay, the amount of the asset, or the cost price of the asset is, we've got it down here, an amount of 20,000. Okay, so let's fill that in. So the amount is 20,000 times the rate of depreciation. Let's go to our information. Okay, we've read this out already. Depreciation on equipment is at 20% per annum on the cost price method. Right, so let's go back there. So times 20% because it's on the cost price method. And now we're looking at time. Right, guys, so remember, we've obviously sold the asset on the 1st of January. Let's find that quickly. 1st of January. So I've used the asset. Financial year starts on the 1st of July till the 1st of Jan. So I've used the asset for an additional 6 months before I've decided to sell the asset. So I'm going to update my depreciation for that 6 months. Okay, right, so let's do this calculation and then we'll take a quick break. 20,000 times 20%. Okay, divide that by 2. So we're writing off an additional 2,000. Okay, I just want to quickly take this amount through. Okay, so my additional depreciation is an amount of 2,000. Right, now that we have all our amounts, we can complete our asset disposal T account. But Megan, I think we need a break first.
I think they need a break first too. So guys, just breathe in, breathe out, go to the loo, come back, and I'm sure we will be right back after the break. Welcome back, grade 11. So when we left, we were doing a very awesome sum. I was going to say something else, but I just keep it at awesome. I was going to say complicated, but awesome sum on accounting. It is depreciation. Right?
It is depreciation.
Fantastic. At least I got that right too.
Yeah.
Oh my goodness. So I just want to tell you, in case you didn't listen and you just tuned in, you can find us at facebook.com/learnextra with an X, or Twitter @learnextra. And then she's going to take it now. So
Okay.
carry on.
Right, guys, as Megan already mentioned, we stopped at asset disposal. So we decided to sell the old equipment, and we calculated our accumulated depreciation at the date of sale. Didn't calculate the amount yet. We updated our accumulated depreciation. So at this point, our total accumulated depreciation at the date of sale is an amount of 12,000. Right, what do I do with all of this information? Remember, guys, the purpose of drawing up the asset disposal T account, which we're going to do in a moment, is to calculate whether the business made a profit or a loss on the sale of this particular asset. So in terms of the information that I've got in front of me, my cost price is 20,000. So let's put that on our calculator. Cost, an amount of 20,000. My accumulated depreciation is an amount of 12,000, which I've calculated already. So minus 12,000, that's going to give me the carrying value of this asset that I'm selling. Carrying value means, Megan, I have to teach you something.
Okay, teach me. Go
So
for
carrying value means, what was that equipment worth when you sold that equipment? So let's say, for example, it was your laptop. When we bought the laptop, we bought it for 20,000.
Yeah.
We've obviously used it over a period of time,
Yeah.
and whatever we've used is what we call the accumulated depreciation written off.
Okay.
So in this case, it was an amount of 12,000. So the actual worth of your laptop is now an amount of 8,000.
8,000, yeah.
Okay, so I'm going to write that down. So the carrying value of our equipment is an amount of 8,000. Now let's look at how much did we sell the equipment for. Our selling price was an amount of 12,000. Okay, back to Megan. Okay, it's worth 8,000, but then I've sold it for 12,000. So did I make a profit?
Not really, because you already paid 20,000.
Okay,
for it.
but hang on, Megan. Just remember, the cost price is 20,000.
Okay.
But I've used it over a period of time.
But then you will.
Okay, so I've used it. That's my
Yeah.
accumulated depreciation, 12,000. So on this day,
Okay,
that
yeah.
laptop is worth 8,000, and I
Yeah.
get an amount of 12,000 for it.
Then you've made a profit.
Then I've
Yes.
made a profit. Okay, and let's calculate that profit. It's obviously the 12,000 minus the 8,000. So we have made a profit of, and I've lost Megan, but it's fine, Megan.
No, I was thinking from when you bought it, then, less.
but
I
just
understand.
remember what happens to the value of this laptop, because laptop
will
is equipment.
yeah, it will
It's going to
decrease.
obviously decrease over a period of time. Okay, so no one's going to pay you 20,000 Rand for that laptop. They're going to pay you close to more or less what it's worth today.
Okay.
Okay.
Yeah.
Right. So I've made a profit of 4,000. Now, all of this information, guys, we need to now put it into our T account, which is my asset disposal. So let's do that. We've got all the amounts already. So this is now the easy part, guys, because you know how to do this. Asset disposal, on the debit side, I'm going to record my cost, which is 20,000. And Megan, I'm now not going to ask you anything, because now we're looking at property accounts. Okay, so this is equipment. Okay, and guys, remember, you're going to fill in your dates and folio references. On the credit side, my accumulated depreciation on equipment, which was the updated amount of 12,000. Right, my selling price also was an amount of 12,000. And remember, this asset was sold on credit, if we go back to our information. So my contra account would be debtors control. And I've already calculated I made a profit of 4,000. Okay, one more time, guys, because this is important. Cost minus accumulated depreciation gives you your carrying value. So in this case, my carrying value is 8,000. I compare that carrying value to the selling price, which was 12,000. So I've therefore made a profit on sale of asset. Okay, and my profit being an amount of 4,000. Okay, and there, my T account is now completed. Okay, Megan, still no questions?
Nope. I'm gonna be honest.
Yeah, okay, that's fine.
You can use me though. I'll try feed as much as I can.
I will. Thank you, Megan.
Go for it.
Right, guys, what do we now do? Remember, we were still filling in our tangible asset note. So under movements, what happened during the year? There was a disposal. Okay, and remember, disposal is recorded at carrying value, and my carrying value, an amount of 8,000, which must be in brackets, because remember, you're getting rid of this asset, so obviously your tangible assets are going to decrease. And I've written it in the wrong place, so let's just fix that quickly. So my amount was, just undo that. Okay, so my amount, 8,000. Get our pen out. Okay, there we go. Right, let's look at how much of time we have left. We've still got a bit of time, so let's focus now on the very last part, which is our depreciation, depreciating our remaining equipment. Before we do that, however, before I forget, guys, okay, we're still not finished with the actual adjustment. Okay, so we've looked at disposal. Now we need to record our purchase of our new equipment. So on the same day, the business purchased new equipment for an amount of 8,000. So let's take that information through in our answer sheet. So addition at cost, and Megan, I have no idea why, but these figures seem to be repeating themselves. Okay, I just want to make it very clear to the students that it's just a pure coincidence.
Okay.
Okay, right, so that 8,000, I'm going to write it in a different color so you guys don't get confused. That is my additional equipment purchased. And again, additional equipment purchased, I need to do or calculate the depreciation that needs to be written off. So we've done disposal. Okay, remember we're looking at equipment. We're now going to look at the new equipment. So my cost, an amount of 8,000 times the rate, which obviously doesn't change, which is 20%. Okay, guys, and remember this asset was purchased on the 1st of January. The financial year ends on the 30th of June. So for the new asset, I've obviously used it for this time frame, which is still 6 months. So I'm going to depreciate this asset for 6 months. And the depreciation that I'm writing off, guys, not a difficult calculation, so I'm not going to use the calculator. It should be an amount of 800. Okay, right, and then the final bit to this note, or to equipment, depreciation on my old equipment. Okay, right, now my old equipment, guys, remember, is going to refer to my balance at the beginning of the year. I need to first remove the asset that I sold, in other words, the disposal, and then calculate my depreciation. Okay, so let's do that. Balance at the beginning of the year. We've got it in our note already. So at the beginning of the year, our cost was 120,000. Okay, so let's take that through. Cost being 120,000 minus the disposal cost, so the asset that we obviously sold, the 20,000. So minus 20,000, and that will give me the cost of the remaining or the old equipment, which is 100,000. So on that 100,000, I'm now going to provide my depreciation, which should be 20%. Let's just quickly change that. Okay, so times 20%. The old equipment would have been used for the entire financial year. Okay, and that obviously cancels out. So the additional depreciation that I'm writing off on the old equipment is this amount of 20,000. Okay, right. Okay, so let's look at our amounts that we have. I know there's a lot of writing in here, grade 12s, but I'm sure you are following. So on the old equipment, my depreciation is 20,000. On my new equipment, my depreciation is 800,000. And I also wrote off depreciation on a disposal, 2,000. So therefore, my total depreciation that I'm writing off grade 11s will be
I was about to say shame.
20,000.
You made them sound like grade 12 now.
Did I say grade 12s? Okay,
It's like, oh, shame.
okay,
and
sorry,
dreams.
grade 11s.
Oh, it's all good.
Right, so the 20,000 plus 800, at least Megan is paying attention.
You see, I'm listening
Yeah,
now.
see. So plus 2,000, and that will give us a total depreciation amount of, guys, I have to use the calculator. Okay, 20,000 plus the 800 and plus the 2,000 to give us our total depreciation, 22,800.
Yeah.
Okay, right, so let's fill that into our answer sheet. Okay. Right, so total depreciation, make sure on the correct line, 22,800. And we're now ready to work out our carrying value of equipment at the end of the year. Okay, so my calculation, guys, I'm going to start off with carrying value at the beginning of the year, which is the 75,000 minus, let's just fix that. It should be plus the 8,000, which was the additional equipment, minus the 8,000, which was the disposal, less the depreciation, 22,800. So at the end of the financial year, our equipment is worth 52,200. Okay, right, the last two lines, guys. Again, a bit of calculation, and I know with accounting, there's so much of calculation, Megan.
Yeah, it's
There
ridiculous.
really is. But I want you guys, because it's so important, the last two lines, I really need you guys to pay attention in terms of how I'm going to calculate my cost and my accumulated depreciation at the end of the year. So I'm just going to quickly try and erase this. Megan, I don't know if you want to tell the mindsetters anything.
Of course, I'd love to tell them something.
Okay.
I just want to remind them that about the K53 be a bright spark. I can't say that. I've tongue twisted that twice already.
Lots
Be
of
a
Bs.
bright spark competition is running. Please just go and buy yourself Safeway's K53 book, or go and purchase it on Google Play or the Samsung Galaxy App Store. So just have a look. All you have to do is enter the competition. Lots of you I've spoken to on the Facebook page have told me that they're actually getting their things going, and they've actually bought the book and the app, which is really cool. So you could win yourself a Chevy Spark. And I think we're ready to go back.
Yeah, we are. Right, guys, my cost at the end of the year. Now remember, always start off with cost at the beginning of the year, which we can obviously pick up from the notes. At the beginning of the year, my cost of equipment is 120,000. So let's write that down. Right, now what happened during the year? I bought additional equipment, so that cost will increase My additional equipment cost an amount of 8,000, but I also sold equipment during the year, and remember, I'm referring to the cost, and the cost was an amount of 20,000. Okay, we came across this. Okay, so guys, very, very important. You're starting with beginning of the year. You're then adding any additions, because additions are always at cost, and you're subtracting your disposal, also the cost. And that then would give me my cost at the end of the year. So let's do that quickly. Beginning of the year, 120,000 plus the 8,000 minus the 20,000 to give us our cost at the end of the year, which is 108,000. Okay, so let's fill that in, 108,000. Right, the very last line, accumulated depreciation at the end of the year. Okay, so accumulated depreciation. Again, we're going to start with accumulated depreciation at the beginning of the year. So let's do that. So at the beginning of the year, my accumulated depreciation was an amount of 45,000. Okay, so let's take that, 45,000. Again, we're going to add this year's additional depreciation written off. So this year we've written off our additional depreciation was an amount of 22,800. So plus 22,800, but we also need to subtract the accumulated depreciation that was transferred to asset disposal. So let's quickly find that figure. So the accumulated depreciation that we transferred to asset disposal was an amount of 12,000. Okay, so let's write that down quickly. Okay, so minus the 12,000. Right, and that would now give me my accumulated depreciation at the end of the year. So 45,000 plus 22,800 minus the 12,000, and that gives us an amount of 55,800. Okay, so 55,800, and this is the amount that we're taking to our note, 55,800. And remember what I said, guys, if I subtract these two amounts, I must get my 52,200, so let's just check whether we do get that. So cost at the end of the year, 108,000 minus accumulated depreciation, 55,800, and my carrying value, 52,200. Okay, right, mindset is we don't have much time, but the very last question, or the second last question, if you add up these three amounts, this is what gives you the amount that you take to the balance sheet. Okay. Right, Megan, I'm going to hand over to you.
Thank you. It's proudly sponsored by MTN SA Foundation and endorsed by the Department of Basic Education. Thank you. Please get voting on our Facebook page, and don't forget 100,000 likes, and watch on Safeway K53 after this. Have a great evening, guys. Cheers. Bye.